recognized provident fund is 12% exempted, and for unrecognized provident fund, it is totally ignored. Then employees' contribution is allowed as deduction under Section 80C for all the cases. Then, in case of interest on provident fund, it is fully exempted. So, for SPF, that is statutory provident fund, we can find out everything is exempted. No amount is taxable. But in case of recognized provident fund, 9.5% is limitation given. So let's go to our numerical. In case of statutory provident fund, everything is allowed as exemption. In case of recognized provident fund, 12% contribution is allowed of basic salary and 9% interest is allowed as exemptions. So let's see the calculation part. In case of statutory provident fund and unrecognized provident fund, we have salary 3,60,000. Dearness allowance, that is, they are divided into two types. Here, it is said one-fourth of amount is part of salary for retirement. So, we are divided dearness allowance to, that is 24,000, which is one-fourth, is for retirement, whereas the actual dearness allowance, that is three-fourth, is 72,000. Then, employees' contribution is 48,000. As per provision of SPF, that is statutory provident fund and unrecognized provident fund, it is fully exempted. So the value of PF contribution will be nil. Interest credited to provident fund. Now again, this interest credited on provident fund is fully exempted, so the value will be nil. Then commission on turnover, yes, it is taxable. Fixed commission, bonus, it is taxable. Now in case of hostel, it is 15,000 for three. So limit is given for two children. So we calculate on the basis of 15,000. As per the provision of income tax, the 300 is allowed as limit. So 300 per student into 12 months. So it is 3,600 for two into two. So 7,200 is allowed. So when I deduct from 15,000, 7,200, the balance amount is 7,800. And hence, my gross salary in case statutory provident fund and unrecognized provident fund will be 5,14,800. I'll wait 2 minutes. Please read the answer. Then again, if in doubt, please post in chat box. So let me show you the provisions again so that this answer is clear. In this numerical, the most important thing what you need to study is contribution to provident fund, interest on provident fund. These things we are going to study. In case of hostel allowance, limit is allowed 300 per student. So I multiply 300 into 12 for a year, and only two children are allowed. So it is multiplied again by two. So it becomes 7,200. So from 15,000, I deduct this amount and I will find out the taxable amount is 7,800. The PF contribution is made 48,000 and it is fully exempted. So the value of PF will be nil. And then I multiply other values. So let me show you the provisions. In case of statutory provident fund and unrecognized provident fund, every amount is fully exempted. So you can see for this provident fund, the amounts are exempted, and for unrecognized provident fund, amounts are exempted. Similarly, for public provident fund, the amounts are fully exempted. Only in case of recognized provident fund, the employer, that is the person who is giving job, his contribution is exempted up to 12%, and interest it is exempted up to 9.5%. So in case of all provident fund, only if the provident fund is RPF, that is the recognized provident fund. Recognized provident fund means it is a private provident fund which is registered with Provident Fund Authority, but it is not government provident fund. And since it is not government provident fund, the contribution to this fund are not fully exempted. So 12% employees contribution and 9.5% interest is chargeable for tax. So hope you are read the provisions. Shall I go again and explain the numerical? So since for statutory provident fund and unrecognized provident fund, everything is exempted, we are calculated. Now let's see the other type of mutual fund. In case of recognized provident fund, 9.5% and 12% is allowed. So here every other calculation will be same. But if you find out in this case the 3 lakh 60 will be same, this 24,000, 72,000 will be same. Employees contribution is 48,000. Now here it is only exempted up to 12%. So out of 48,000, only 47,280 exempted. And that's why here 720 Provident Fund contribution is taxable. The second change happens on recognized Provident Fund. They are provided 15% interest, but exempted is 9.5. So whatever the extra interest charge, that is 19,000, sorry, 11,000 is fully taxable. So if we compare the previous numerical answer, in case of previous, it is interest and provident fund contribution is fully exempted. But when it is recognized provident fund, 11,720 will be added. And hence, if you can see, the hostel contributions are same. So the taxable salary will be 5 lakh to 26,520. Anybody had doubt in this calculation part? So let's see the remaining type of provident fund. So compute the gross salary and find out for statutory provident fund, recognized provident fund, and unrecognized provident fund. Please remember, only for B part, that is a recognized provident fund, employees' contribution is allowed up to 12% and interest is allowed up to 9.5%. So let's talk this numerical. I'll wait 2 minutes, then I start discussion. So read the numerical, please. Now, please remember, he has left the service after 15 years and received refund of 6 lakh from Provident Fund on 1st August 2019. He consists of his own contribution plus equal contribution by employer and interest is 75,000. Now, he has received 6 lakhs. In case of 6 lakhs, he has equal contribution by employer and him. So let's talk about how to solve this numerical. So here we will find out taxable amount of salary. Now, please remember this numerical talks about employees' contribution. So 6 lakhs minus 75,000 divided by 2, I can find the salary. Now, how this salary is derived? This salary is derived based on the question that he was working 15 years. Okay. And he left service on 1st August. So April, May, June, July, August. So these April, May, June, July, August. These are 5 months. So if I calculate his service, I'll find out he's received interest 75,000 and he's working for 15 years. So I have to find out the refund based on Provident Fund. So when I start solution, I have to find employees contribution. So 6 lakhs is a return which is given minus 75,000, which is interest. So actually, he is received. Why it is divided by 2? Because 50% is employee's contribution and 50% is his contribution. So when I deduct the interest from a total 6 lakhs, my amount is 5 lakh 25,000. And this 5 lakh 25,000, when I divide by 2, I can find out employer's contribution and employee's contribution. Now, in case of employee's contribution, it is 2,62,500 and employee's contribution 2,62,500. So as per RPF, the contribution by employee is fully exempted. So 2,62,500 is fully exempted. In case of interest, it is fully taxable. So when I calculate the values, since your salary is not given, I have to assume certain things, and based on assumptions, I can say interest and contribution by employer is fully exempted, assuming it is less than 12%. Now, for the Provident Fund, I will repeat again the provisions and will directly go to the retirement benefits. In case of Provident Fund, if it is recognized Provident Fund, Then exempting salary is 12%. Okay. So employees' contribution is allowed up to 12% and interest is allowed up to 9.5%. In all other cases, employees' contribution is fully exempted. So you have to only remember the two values. That is, in case of recognized provident fund, 12% employees' contribution and 9.5% interest. These two are taxable. For all other, there is no tax in any case. And same provision we have tried to discuss in the last numerical. Now let's talk about retirement benefit. The retirement benefit is called gratuity. Under section 10, subsection 10, it discusses the provisions about retirement benefits. A government employee, when he receives retirement benefit as a gratuity, it is fully exempted. In case of employee which is covered under Payment of Gratuity Act, list of following is allowed: actual amount of gratuity or 20 lakhs or 15 days of salary last drawn over completed year of service or part of in excess of 6 months. For all other employees, the actual amount of gratuity, 20 lakh and half month of average salary drawn is exempted. Now for payment of gratuity employees, excess of 6 months is considered, but for all other employees, average salary is considered. So let's see the solving. I'll wait for 2 minutes. Please read the questions, then we can talk about tax treatment. So now let's discuss each. Mr. Selam, a government employee, receives 2 lakh as a gratuity at the time of his retirement. So for government employee, the gratuity received is fully exempted. And since Mr. Selam is a government employee, the retirement benefit, that is gratuity he receives, is fully exempted. Now, in case of second, that is B, Rajendra is employee of Idaco Limited and he receives 3 lakh as gratuity. He is covered under Payment of Gratuity Act and he retires on 15th November 2019 after service of 32 years and 7 months. At the time of retirement, his basic salary and DA was 3,000 and 1,000. So we have to calculate his benefit under the Payment of Gratuity Act. So here, the average of 15 days salary and excess of 6 month criteria will be applied. In case of C, Satya Priya is not covered under Payment of Gratuity Act. So here, the clause of 6 months will not be applied. So let's see the answers. Since the Mr. Sealam is a government employee, no tax is liable to pay. His all gratuity is exempted under Income Tax Act 1961. Now, in case of B, he is covered under Payment of Gratuity Act. So, the three conditions are there. The gratuity actual received is 3 lakhs, whereas 20 lakhs is a maximum limit, and 15 days average salary for every year completed. So, we are given salary as a basic plus DA. and we are going to find the average. Now the question is, when I'm calculating 15 days salary, why it is divided by 26 and into 33? The 26 are the days of a month. They assume in 30 days of month, 4 days are having holiday. So when I deduct 4 days from 30, the days are 26. So 15 divided by 26 into number of completed years service. So if you can see, he has completed 32 years and 7 months. So when it is 32 years, 7 months, it means 33 years service he has completed. And so when we work out for him, it comes 76,154. So actual gratuity received is 3 lakhs, maximum limit is 20 lakhs, and lowest is 15 days average salary, that is 76,154. So if I consider the lowest part is 15 days salary, and hence out of 3 lakh gratuity received, I have to deduct exempted, and whatever the remaining part, that is 2 lakh 23,846 is fully taxable. Please read this solution and I'll wait for 2 minutes. And if in doubt, please ask me or post in chat box. Anybody doubt? Anything shall I repeat? Now let's see the C part. In case of Satya, she is a private employee and not covered under Payment of Gratuity Act. So in her case, let's see the numerical. In her case, she retires on 25th December 2019 and here she has done service of 36 years. She receives 5 lakh as a gratuity and her salary was 6,000 per month from up to 30 June 2019 and 7,000 per month up to 30 July 2019. Besides, she also get dearness allowance of 1,000 per month, 70% of which is considered for service benefit. So 30% of 1,000 will be for retirement. So we'll consider 30% part. So the gratuity actually she has received is 5 lakhs. The maximum limit of exemption is 20 lakhs. And if I calculate half month salary, she is getting for 36 years is 1 lakh 29,600. So if I compare A, B, and C, the lowest one is 1 lakh 29,600. And this 1 lakh 29,600 will be exempted. This is not tax. So from 5 lakhs, I have to deduct 1 lakh 29,600 to find taxable part of gratuity. So her taxable part of gratuity is 3 lakh 70,400. And hence, when I calculate her salary, the salary of 10 months will be 65,000. Basic salary, if I calculate all average, it comes to the 65,000, whereas dearness allowance for 10 months will be 7,000. So average her salary is 7,200, and which I use for calculation of 36 months. So let's move to next numerical. Mr. A is a government employee and receives 78,600 as a gratuity. He retired on 30/9, 2019 under the new Pension Code Act, compute the gratuity. We all know that if he is a government employee, his gratuity is fully exempted. So here, no tax is payable on his income as gratuity. Let's take another example of gratuity. Mr. B is an employee of ABC, so he's not government. He receives 2,05,000 as gratuity. He is covered under Gratuity Act. He has done the service of 35 years and 7 months. That means he has done the service of 36 months. At the retirement time, his salary was 2,700 per month. So let's find out. First, 20 lakh is exempted maximum. Second, actual gratuity is to 2 lakh 5,000. Now we have to find out 15 days average salary. So it is 2,700 into 15 divided by 26. So we'll get average salary, and he's working for 35 years, 7 months. So into 36. So his 15 days salary is 56,077, whereas his actual gratuity was 2 lakh 5,000 and maximum limit 20,000. So lowest is 56,077. So from his gratuity calculation, the lowest part exempted is 56,077. So from 2 lakh 5,000 gratuity, I will deduct the exempted part and I'll get taxable part of gratuity 1 lakh 48,923. Please read this numerical and solution. If any doubt, I can re-explain. Anyone, any doubt? Let's move for next. Mr. Abdullah is employee of PQR Limited. He received 68,000 as gratuity. He is covered by Payment of Gratuity Act. So again, average of 15 days. His service is of 36 years and 9 months. Now 36 year 9 months means 37 years. And at the time of retirement, his basic salary was 3,200 and dearness allowance was 1,000. So let's find out. 20 lakhs is the limit. Actual gratuity received is 68,000. Then 15 days salary, we'll find out 4,200, that is 3,200 basic plus DA 1,000. So it is 89,654. So if I say A 68,000, B 20 lakhs, and C 89,654, the lowest one is the gratuity actual received. So since the gratuity actual received is the lowest, it is fully exempted. And in his case, he has not required to pay any taxation because the gratuity received is fully exempted. Just read the answer and question. I'll wait for 2 minutes. If any doubt, I'll re-explain. If any doubt, please post in chat box or you can unmute and ask me. So I guess no doubts. So I'll move further. So let's skip the gratuity part. Now let's talk about pension part. In case of pension, we got committed and uncommitted. The committed means the pension is received in lump sum. For government employee, if the pension is received in lump sum, it is fully exempted. But for private person, the lump sum payment received as pension, then in that case, one third of pension is exempted if gratuity is there, and if gratuity is not there, then 50% of pension which is committed is exempted. So I repeat again, we have two pensions, one committed, that uncommitted, which means monthly, and committed, which means lump sum. If the lump sum pension is collected, then for government employee, it is fully exempted. But in case of non-government, it is one third if gratuity is there, and if no gratuity, one half pension is exempted. So please read these provisions, then we'll start discussion. So let's now start solving numericals. Now the same numerical we have to solve by three ways. The person retired on 31st October 2019. He received pension of 4,000 per month. He got three-fourths of pension committed. So his committed pension is 4 lakhs. And his basic salary was 10,000 per month and dearness allowance is 5,000 per month. His entertainment allowance is 1,000. So we're not going that interest part. We're just working on whether the committed taxable or not. Now, in first case, when he is a government employee, there will be no taxable uh, committed pension. So whatever the lump sum amount he received, 4 lakh, it is fully exempted. But in case of non-government, that is in B case, he received gratuity, then one third is exempted and two-third is tax. So if I calculate two-third, it is 8 divided by 3. So something around 2,33,000 it is taxable. In third case, he is non-government employee and he is titled to get the gratuity. So here the 50% is allowed as exemption. So 2 lakhs is taxable and 2 lakh will be exempted. Let's see the solution. If he is a government employee, it is fully exempted. In case he is a government non-government employee and he did not receive any gratuity, then the committed pension will be exempted based on his gross salary. That is 2,20,200. That is 2/3 is taxable. And when he did not receive the gratuity, 1,33,000, that is 1/3, is pension. My dear students, I'm not going on the calculation part of this salary. I'm only concerned about treatment of pension. It is 1/3 and it is 50% based on gratuity. Now, let's see another example. Mr. A retired from XYZ and he received 12,000 per month during the year. Commit the taxable pension. Now, he is receiving 12,000 as committed pension. So, we have to find that during the year, he has done the calculation part. So from 1st April to 30th April, it is 1 month over. So remaining are 11 months. So it means committed pension, that is lump sum, he has collected for 11 months. So his 11 months, the pension will be 11 months into per month 12,000, 1,32,000. Now take another example. Compute the taxable amount if gratuity received, if not gratuity received, and for government employee. For government employee, the answer will be zero taxable value. For for gratuity received, 1/3 committed pension will be exempted, 2/3 tax. So in case 1/3, we'll find out it is 80,000, it is exempted, and when you not receive the gratuity, 50% is exempted. So 50% value will be, we have to calculate, that is 80,000. Now let's talk about 20, the next numerical, and we'll skip now the gratuity and we'll move further for other example. Calculate the taxable value of committed if he receive gratuity and if he do not receive the gratuity. In case of government, again, tax free, he retired, okay, he received 3,600, and he got 3/4 of pension commuted and received 1,80,000 from employee. Now, if government employee, it is fully exempted. In case he received the gratuity, then 1/3 will be exempted and 2/3 will be taxed. So I will calculate the amount, and then in case he did not receive gratuity, 50% is exempted. So only three values I'm calculating in case of commuted pension. I'm nowhere concerned about other values. So instead of giving time for this, let's proceed for other tax calculation. Now this is about medical reimbursement, but only the last 5 minutes are remaining. So what we'll do is we'll just revise the provisions we learned, and in next session, that is tomorrow morning, we'll talk about medical provisions. We'll talk the first part about gratuity. In case of gratuity, there are three causes. One, if he's a government employee, it is fully exempted. If he's non-government and he's covered under Payment of Gratuity Act, then 15 days salary excess of 6 months last is calculated. Whereas if he is not covered under Payment of Gratuity Act and not government employee, then the 15 days salary will be considered for exemption. So I will calculate A, maximum limit 20 lakhs, B, either average of 6 months, and C, the actual received. What is the lowest? It is totally exempted. Then we talk about committed and uncommitted pension. In case of committed pension, for government employee, it is fully exempted. But if he is a not government employee and receive the gratuity, then one third of committed pension, that is lump sum pension, is exempted. Whereas if he did not receive the lump sum pension or committed pension, then 50% of his lump sum pension is exempted. So that's all for today. Thank you being part of this session. Tomorrow morning we're going to conduct on Monday we'll be having both the lectures in the morning slot, and at 6 o'clock we'll do the AFM, and at 8 a.m. we'll take direct taxation. So now we have to talk about medical reimbursement, then leave encashment, then we'll further calculate on accommodation. After accommodation, we will be finishing all the calculations for taxable salary, and this will be aimed for income from salary part. Once we finish income from salary, we'll move now the last part to the capital gain, and by Thursday, the syllabus with numerical of direct tax will finish. So by Wednesday, if any doubt, please ask me in a class, because after Wednesday, there will be no session for direct taxation. Okay? So wish you a wonderful time ahead and enjoy.